Welcome to Profiletraders. This is Reza, February the 18th, and you're looking at the chart of S&P E-mini futures. Yesterday, I stated that once market was going to approach 1944-ish, which on the daily was this top here, I told you that because we have now traveled long enough and high enough while reaching that level, that we should start to encounter at the very minimum some resistance. And today, as market tried to break above the previous session, it was immediately rejected back into the range. And then as soon as we opened, there was very little hesitation for the market to trade to the downside, as it was very clear that we did too much too fast on the upside and a retracement was due. However, besides that very sharp and clean drop that took place from the open, the rest of the day became an absolutely horrific and terrible price action. All I can tell you is that when you look at this little profile here, right within this profile, we had 5 swings of 10 points each. Within this little profile, market swinged 50 points up and down, up and down, up and down, each 10 points more or less. That's how deadly it was. And I warned you that this could happen because we are in the middle of the biggest scam of the monthly scams, which is the option expiration. And very often time you see weird stuff like that, heavily manipulated markets taking place when you are inside the option expiration week. But in the big picture, nothing damaging has been done to this market. We were even unable, upon a break of 1915.5 support, which I gave you yesterday, to go to the next level of support, 1909. And it came in, out, in, out, in, out of 1915.5 100 times. And now it's closing very much so near the middle. So at this stage, this could easily be seen as a pause for future push to the upside. However, as we will push to the upside, 1944 will be key. If 1944 is broken to the upside, which I do not believe that it will happen if the move is initiated from where we are at 1917, but for whatever time next week, if we do break 1944, then we will be on a breakup mode, and then there will be a much more aggressive buying that will come into the market from these guys that are still holding their short, but they do not want to see this 1944, 1950 to break to the upside, because if it does, then the level of profit that is left for them on this distance here on the drop will be chewed in, and people will get very nervous. So 44 to 1950, very, very important. If we do not break that, then we're going to rotate inside this very wide range, and it's going to be a continuation of this sideways pattern that we have here. And if we continue too long not be able to break up above 1944, 1950, then very much so we should come for a retest of the low. And if God forbid we do exit out of this current rotation to the downside, then it would become a continuation of the last leg down, which was this directional move down. Then it will project itself on the way down, and it could be quite deadly. And at that point, we could very much so go to my ultimate downside target, which is about 1675. But we are not there yet. So as of right now, supports, we're going to cancel the 15.5. We're going to remain 1909. We're going to keep 1904. And we're going to keep 1900. These are the new levels of support. In terms of resistance, 1924 is now resistance 1. Then after that, I don't have really much up to 1930. 1933.5 will be the next level of resistance. If that one breaks, 1944 and 1950. Between that 44 to 50 will be a very, very, very critical resistance range. But be aware that tomorrow again it's continuation of option expiration, and a lot of funky business can take place until this option expiration scam is behind us. In terms of crude, well, the whole mumbo jumbo of now Iran agreeing with the cut, blah 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 blah, didn't do anything to the market today. Even though that overnight was a very bullish looking close, as soon as we tested the overnight high, we rejected back down, which was right there a response that the market is opening too high and we needed to come down. And that's exactly what it did. And I believe 34.12 was one of my resistance level from yesterday's recap. And 32.65 and 32.90 was also were given as support. So pretty much resistance nailed the high, support nailed the low. And now resistance above where we are at becomes 33.32. Any given time that we are allowed to enter back into 33.32, there is a big possibility that we are going to go trade through this whole area of very underdeveloped activity and get ourselves up to 33.80. 34.12 remains major resistance, and on the downside, if we continue the weakness and end up during the overnight break today's low, there is really not much support at all until we come down, reach 31.5, and then there is a POC down there at 31.38. Two things to keep in mind: neither the glut or the excess of inventory in this market has been resolved, nor will it be resolved by this phony baloney production cut lie that they love to feed the world and then go back behind the deals and cheat. Neither the problems of the stock market that had a very bad consequences on January, neither nor have disappeared. Not a single problems that we had from before has been fixed. None. However, we have seen a very nice ride of crude, and we have also seen a very nice ride in ES. Therefore, be very careful that if nothing has been fixed in reality, this type of bogus rallies are short-lived and further trouble may be ahead. So I think we have now reached a level that we need a correction both in ES and in CL. This is it for today. If you wish to learn this style of market profile, join my trading room. You can get my package offered from my website, profiletraders.com. Thank you for listening, and to the next time.